So ladies and gentlemen, Greg Michalowski from ForexLive.com. I take a Forex quick look at the sterling versus US dollar. This pair yesterday broke above the high price that we saw in the month of June. Those high prices came in near the 128.47 level, and as you can see in trading yesterday, we did move above that level. And in trading today, we continued that move to the upside. Now getting above that high price from 2022 opened the door really up to this area right through here. This area has a number of different swing lows in the month of I guess that's March and April of 2022, right here and here and here and here. And then we broke below that level with this gap or this sharp move to the downside here, and then really never returned to it until, well, we're starting to move up toward it. That area, by the way, comes between 129.71 up to 129.98. Remember that level, mark it down on your charts. It is a target on further upside momentum. Now, the problem with, or there is an interim resistance ahead of that area. And if I look at the daily chart here and zoom in a little bit closer, I'm going to go even further closer here. This level connects the recent high prices right here, going back to the month of beginning of April, and then here in the month of May, here in the month of May, and here in the month of June. That level comes in at 129.44. So here's the 129.71 level. 129.44 is the interim risk defining level. Here, or bias defining level, you need to get to and through the target, but the high price can only get up to 129.34 today before rotating to the downside. We did see weaker employment data come out of the UK with the unemployment rate moving higher. We saw the claimant count also moving higher, suggesting a weaker. So that seems to have tipped the bias more to the downside here today, just ahead of that key level on the top side here on the daily chart. So. Maybe the tide is turning a little bit here for this pair. Taking a look at the hourly chart, we have another trend line here, which is in play as well. Now we broke above that trend line here, traded above and below it, and then moved to the upside before rotating back to the downside. Again, helped by that employment statistics, and we are trying to move back below that trend line through here, which is giving a little bit of a bearish bias. Where that level comes in, I'm going to put a line here, somewhere around the 128.96.95 level. Looks a little lower than the line that I drew there. So ahead of the 129 level. If the price can stay below that level, that's gives a little bit more bearish bias. We're currently trading right around that level right now. So this is resistance here, folks. Watch that area. Probably give it up to 129. A move above 129 level would put the price more above that line and give more of a bullish bias with the resistance up at 44 level on the top side. But key area now for this currency pair. We'll see how it all plays out. On the downside, if we stay below this trend line right through here, we do have a rotation. We could see a rotation back toward the low price or the high of this swing area. This swing area was defined by swing highs going back here and swing highs going back to on Friday's trade right through here. That was a key area, 129.48. We moved above the level yesterday and stayed above the level. So moving back to retest that level would be a key test for the sterling versus US dollar and trading here today. That's all I got here for today for this currency pair. The sellers are trying to put a lid on it right now against the 129 level. We'll see if the price can stay below that level and rotate back down toward the 48 level. If not, then a move up to 129.44 is going to be our key level on the top side. Greg Michalowski for ForexLive.com. Good fortune to trading. Bye-bye now.